Hello everyone, this is Martin. Welcome to this new video. It is called Take Time to Reset, and it's my ABC Free Signals review for the signals I sent out to all my members, again free of charge, and these signals were sent May 16th to the 20th of last week. Okay, now take note. If you're serious about Forex trading, then you need to treat it as a business in good times and in bad. You're the owner of your own currency trading business, and when your trading underperforms, you need to take some time off and reset. Exactly what does this mean? Well, it doesn't mean that you stop working your business. It doesn't mean that you chill out and take a vacation like my trading doggy friend right here. Yes, you can take a day off and not trade, but during that time, you can review your trading losses and find out what you did wrong, if anything. Find out if you're missing something. Find out if there's anything you can do to improve upon, but get back to work trading as soon as possible. Your business needs to continue to go forward, and perhaps with a better reflection of what needs to be done after you've cleared your mind and rested your eyes. Okay, doggy friend, time to wake up and it's time to get back to work. This is me right here. My name is Martin, and take a look. I'm a proud Canadian trader. You can see the red maple leaf down below, guys. And this is my ABC Free Forex Signals channel. If you want to receive my free signals, all you have to do is send me an email to mine right here, mskyj007 at gmail.com. I'll have more on this later, okay? Now, the first thing before we actually look at the charts, and we're going to see exactly what happened last week, this is my humble disclaimer. My free signal service is an educational program only. I'm trying to teach you how to trade correctly and not give you any specific advice. Okay, let's take a look. Last week, that was May the 16th to the 20th. This is the review. And first of all, we had one trade held over from the previous week, all the way back from May the 12th. You can see that right here. It was the buy USD Swiss franc, and it was a loss for approximately 128 pips, guys. Price hit or stop loss. So that's good. And like I said, whenever we incur some losses, it's so important to stick to your money management. That is the most important thing about trading, is to control your losses and to protect your capital at all times. So this is what happened here. We had a stop loss in place, and we prevented this trade from getting worse. So again, it hit a stop, and this currency pair depreciated by 1.29%. Okay, so this past week, the first trade signal I sent out was right here, May the 17th. It was the buy Euro Swiss franc. This was another loss, guys, and this one was for approximately 103 pips. Again, price hit the stop loss, so this is so important. We always trade with stop losses, okay? And why the pips are so large is because we're trading on the daily time frames. That is our program. We're not intraday. We're not scalping. So we actually incur higher pips when we lose. But remember, we are contained. We contain our losses to a maximum percentage that we adhere to each trade. And again, I would suggest either 1% or 2% or whatever that may be. But it is so important to stick to a percentage gain loss, a maximum loss in percentage. And that way, it doesn't matter how many pips you lose, but you're only going to lose within your percentage. This one depreciated, this currency pair depreciated here by 0.98%. Okay, so this recent past week, the total pips lost was 231 pips. It was minus 2.2% loss on the week for the currency pairs that we traded. Okay, and again, I started these stats at the beginning of October 2021, guys. 22 weeks have now gone by since that time right here, October 2021. 2021, and so far we're up by 4,267 pips. That's still pretty awesome for approximately 193 pips per week. This is what we make on the average if you're trading my program, and the currency pairs have gained approximately 26.6%. Okay, so this is the summary. This is exactly what happened. Let's look at the charts to see exactly the losses that I'm talking about. Okay, and the very first one is the buy US Swiss franc. Remember, this one was held over all the way back from May the 12th. So this past week, we're going to take a look here. First of all, going back to May the 12th, let's enlarge the entry window. You can see right here, guys, our entry was 1.0027. So when I send you an email, I send you the entry. I send you the stop loss. You can see that right here, 0.9794. First take profit target of 1.0079. Second take profit of 1.0116. So here's our entry. Take a look at the line. This is the signal. This is our signal candle. This is our entry candle, guys. And so we got in right here, expecting price to go up, and it didn't. Instead, we'll take a look in a minute. It reversed on us, and that's why we lost the pips. Okay, but this is our entry window. It's important to always log your entries so that if you want to review your trades, you can go back in time and take a look, see what happened. Okay, so let me just take that off, and I will reduce this window here so we can see what happened to this trade. Here we go, guys. We got in right here, okay, right there, and instead of price going up, it went down. The next day, you can see it was a bit of a doji here. You can see the little tiny white body candle there, but it's a doji. And you know, again, we have to have some patience. Sometimes price goes down a bit and then goes in our direction. But in this case, the next day went down to here, okay? And the next day down to here, hit our stop loss of 0.9899. So we got out right there, guys. And instead of holding on to the trade and wishing that price would return in our direction, and we cut our losses right here, guys. And you can see the next day went down with a huge candle. So we missed this. We actually contained our risk to this stop loss right here. Okay. Now, right here, everything looks good, and I'm reviewing all my losses over the last 3 weeks or so, and I do know, like here, for instance, this trend, if you want to take a look, this trend has been sustained for a long time. So we were kind of overextended, and perhaps it wasn't a good trading decision. Sooner or later, I mean, price has to retrace. You can see all along, there's only one retracement right here, and it didn't really retrace back and come back down to our moving average here. This is called the DTL line. You can see that it's our DTL. So in good healthy trading, we generally want to see price come up and then back down and then go up and back down. This is healthy profit taking and continuing the trend. So this is what we want to see here. We kind of had just a trend that seemed to continue forever, and finally it did reverse. Okay, so that was a loss. Okay, let's go on to the next trade. And this one, the very first trade of the week was the buy Euro Swiss franc. Okay, let's take a look at the entry right here. So this is what I saw when I sent out the signal, guys. Here's the entry. I sent out 1.04814 right there. Okay, take a look at that line. Okay, I used the wrong tool. Okay, so right here, this was the signal candle here. Again, a couple of things that I made. You know, I was actually hoping on this pair to actually go through the previous resistance here. See the resistance high, and I was hoping for a breakout going further. In fact, it did not. It stalled and went back down. But here's the entry right here. Here's the signal candle. Again, the signal candle is late. Here's the actual signal. If we would have gotten in like right here, then this would have been a good trade. But so it's a late signal. Basically, by that I mean the train has already left the station and we are chasing the train. So, but I had a good, my analysis said that price should have gone higher and it didn't. Okay, so anyways, so that was our entry, our first take profit, second take profit, and our stop loss here, 1.0378. That is so important in case price comes back down. We want to contain our loss, okay? So let's reduce the size of this window and let's take a look at the big picture, see what happened. So we got in right there, guys. Price went up just a wee bit, but then take a look, went all the way down to here. Now, this is, again, this is part of the risk money management. That's so important, okay? Instead of taking a loss all the way down here, we had a stop loss of 1.0378, okay? And right here, so our trade was closed right there instead of down here, right? And worse, a lot of traders they hold on to their trades too long, wishing or hoping that their trade would go back in the direction, and some traders, I'm sure, not our traders, because I know most of you are listening to me and listening to my process. So we cut our losing trade short, but some other traders who do not follow my program, they might have held on to this trade from here all the way down to here, all the way down to here, in fact, but it did come up here. So this is called containing our risk, sticking to our risk management principles and our rules. And guys, we're going to be okay and still ready to trade another day. Okay, so this was a losing trade. Again, take a look here. We got in right here, and again, take a look at the previous resistance, okay, and again, I was expecting price to go higher. So again here, perhaps this was a bad decision. Never wait for you know, the rule is, when it comes to trend trading, we don't want to trade into a resistance. We don't want to take a buy trade into a resistance, or we don't want to really take a short trade into support, right? But often, and I've been correct in the past, price will bust through a previous resistance zone and go in our favorite direction. In this case, it didn't. It just reversed down. And take a look at this big whopping candle. Don't know why, what was the reason for this huge candle, but I mean, this is abnormally too large. Okay, take a look at the previous candles before it. See how small these candles are compared to this big, huge losing candles. And that's why we're stopped out. Okay, so going on from here, I am reviewing all my losses over the previous weeks, guys, and I've already come up with some solutions, and I'm pretty sure that the trading signals I send out will be much better than in the past. Okay, so that's that for that trade. And finally, the last trade for this past week was buy the Australian dollar USD. Okay, I'm sorry, not Australian dollar. Sorry, I want to correct myself. XAU stands for gold. So this is a gold trade, buying gold against the USD. Okay, so let's take a look at our entry window, guys. This is what I saw. It's a reversal pattern. We had a strong down candle here. Okay, a bearish candle, a bit of a doji here, and then a big, huge, strong upward bullish candle. So this was my entry here, okay, at 1840, okay, expecting price to go to at least to our first take profit 1856, and then our second take profit 1868, okay, and here's our stop loss 1812. So that's what I saw when I sent out my signal, guys, and I trade all the signals I sent out, okay? I trade them all alongside with you. So this is exactly here what happened after we got in right there. Okay, the next day we have a bit of a bullish doji. Price did go up. Okay, not quite to our 1856 take profit target. Came back down and then rested there. So we are in profit right now, and I do expect price to keep going higher. Okay, so again, this is a reversal pattern. I expect price to go higher, and we'll see what happens with the opening of this new trading session for this week, Sunday and Monday. Okay, so this trade is still open. I've still got mine open. Okay, so that is what happened this past week. Again, patience is the key. And this is a bit of an inspirational message. Now, remember, last week I said Forex is the ultimate school of hard knocks, right? This is where you learn, and often you, as a trader, you learn through bad mistakes. You learn through bad luck. You learn, it's the only way to learn when you're trading with real money. And the markets are always changing. Sometimes there's volatility, and sometimes the markets are flat. Now, the worst thing you can do as a trader is to not recognize the changes and therefore not do anything. Okay, that's the worst thing you can do. The best thing you can do is to take the time for a break and study your past trades. Reset your mind, reset your body, and reset your trading habits. Okay, so that is my message for the week, and that is it basically. If you want to receive my basic free trade signals, especially the new subscribers or the new viewers to this channel, send me your email address, okay? And in your email address, tell me who you are, like what is your first name, what country are you from. There's absolutely no obligation. It's totally free. There's no opt-in form. There's nothing to fill out. There's no credit card information to send, nothing. It's absolutely free, guys. So why wouldn't you want to try it, okay? I've had a winning record from the beginning when I first started. It's a really good winning record. We're still around the 73-74% rate, guys. And remember that trading my way is going to help you at least manage your risk. You're going to learn how to correctly do that. So send your email to mine right here, guys. mskyj007@gmail.com. Again, mskyj007@gmail.com. So thank you very much for watching. Okay. And cheers from Canada. I'll talk to you again soon in the next video. Below the video, click on the like button. That really helps me, tells me that you appreciate what I'm doing. And you can subscribe and hit the bell below as well. So take care. We'll talk to you again next week. Bye for now.